Okay, let's dive into this. Welcome everyone to today's explainer. We hear so much about the US dollar, the euro, and the British pound dominating global markets, right? But today we're going to unpack the story of a true sovereign powerhouse that quietly but absolutely firmly outperforms them all. We are tracing the calculated rise of a currency that has weathered invasions, defined a modern nation, and literally cracked the code of immense economic strength. $3.20. Now, that is not the price of a cup of coffee. That is the exchange rate for just one single Kuwaiti dinar. Yes, one dinar consistently trades for well over $3, cementing its status as the absolute highest valued currency in the entire world. But how does a nation geographically smaller than the state of New Jersey forge a currency with this kind of staggering heavyweight value? I mean, it doesn't happen by accident, and it for sure isn't just market speculation. To answer that, here is our roadmap for today. Think of this kind of like an 8-bit video game level select screen. We'll start with before the dinar, look at the birth of a legend, examine the Gulf War heist, break down the economic engine, and finish up with some curious dinar facts. So, starting with level 1, before the dinar. Let's rewind the clock to the 19th and early 20th centuries. Back then, the Arabian Gulf was this bustling maritime crossroads, but it actually didn't have a national currency. Local merchants had to rely on a massive, diverse assortment of international coins flowing through their ports. A really fascinating key player in this pre-sovereign era was the Maria Theresa Thaler, which was this beautifully minted silver bullion coin from Europe. Alongside various Ottoman coins, this patchwork monetary system was basically how business got done. Let's move to and see how this builds. As trade expanded with British India, the Indian Rupee actually became the dominant commercial medium across the Gulf. By 1959, things shifted again. To curb rampant gold smuggling, the Reserve Bank of India introduced a dedicated variant called the Gulf Rupee. But here was the fundamental problem. As Kuwait moved rapidly toward full national sovereignty, relying on a completely foreign monetary system became a massive strategic vulnerability that they just had to fix.
Let's level up our narrative with Section 2, Birth of a Legend.
Entering the era of full national sovereignty, Kuwait formally ended its protectorate status with Great Britain in 1961. Because hey, a sovereign nation requires sovereign money, right? So the Kuwaiti Dinar was officially launched on April 1, 1961, replacing the Gulf Rupee. And this brilliantly illustrates something really cool. Notice the origin of the word itself, dinar. It draws its lineage directly from the ancient Roman denarius. By choosing this name, Kuwait was bridging classical Mediterranean monetary tradition with their own bold vision for modern Gulf finance. Right out of the gate, the dinar meant business. It was initially pegged directly to the British pound sterling at exact parity, meaning 1 pound equaled exactly 1 dinar. Backed by these vast, newly discovered oil reserves, the currency established an immediate, ironclad reputation for stability and high value. As the financial system matured, the newly created Central Bank of Kuwait took over the sole oversight of it in 1969, firmly putting the nation's financial destiny into its own hands. All right, now for Section 3, the Gulf War heist. This is kind of the boss fight of our narrative. On August 2, 1990, Iraqi forces invaded Kuwait. During the occupation, the unthinkable actually happened. Occupying forces systematically looted millions of banknotes directly from the vaults of the Central Bank of Kuwait. Adding insult to injury, they declared the Kuwaiti dinar void, attempting to artificially impose the Iraqi dinar on the population. It was a total financial hijacking. Yet following the 1991 liberation, the rebound was nothing short of astonishing. So the crucial point is how the Kuwaiti government-in-exile executed a rapid-fire masterclass in crisis management to save their economy. First, demonetization. They formally voided all stolen banknote series, instantly rendering the looted cash literally worthless on global markets. Second, mere weeks after liberation, they issued the brand new 4th series of banknotes. And third, they initiated a really swift public exchange. This flawless 3-step execution wiped out the stolen cash and restored full confidence overnight. The dinar didn't just survive, it emerged completely rehabilitated.
Which brings us to Section 4, the economic engine. Time to look at the structural power-ups behind this currency.
Now, what's really interesting about this slide is the staggering visualization that 90% of the government's revenue comes directly from petroleum wealth. Kuwait holds around 7% of proven global oil reserves. But the real magic isn't just having the oil, it's how incredibly cheap it is to get it out of the ground.
With extraction costs sitting at a ridiculously low 40 to 50 US dollars per barrel, it creates this continuous, highly profitable stream of state revenue. But, relying solely on one commodity can be risky. That's where this ingenious mechanism comes in, the currency basket peg. Reinstated in 2007, after being used for decades prior, the central bank ties the dinar to an undisclosed, weighted basket of major international currencies. Think the US dollar, euro, British pound, and Japanese yen. This is a brilliant, calculated move to cushion the dinar against the volatility of any single foreign economy. If one dips, the others balance it out, keeping the dinar remarkably stable.
And to back all of that up, we have an economic safety net of truly immense scale, $700 billion. Let that sink in. This represents the Kuwait Investment Authority, which is actually the world's oldest sovereign wealth fund, founded way back in 1953. By actively managing over $700 billion in global assets, this fund basically protects the domestic economy and the currency's value from the inevitable boom and bust cycles of global oil prices. Moving on to our final bonus level of the explainer, Section 5, Curious Dinar Facts.
Beyond its heavyweight value, the dinar has some uniquely fascinating properties you just won't find in most global wallets. For one, fractional banknotes. Kuwait actually issues physical 1/4 and 1/2 dinar notes. It's also subdivided into 1,000 fills rather than a standard 100-cent system. Plus, they've got highly advanced polymer notes with tactile elements for the visually impaired. And finally, just imagine this. Holding these advanced, high-value polymer notes in a society where state oil revenue covers so much that there is absolutely zero personal income tax. None. The real-world application of Kuwait's oil revenue literally goes straight to their own wallets.
Which brings us to a vital question. The strength of the Kuwaiti dinar, as we've seen, is not a fluke. It's the calculated product of vast natural resources, low production costs, a masterful, diversified currency peg, and deeply resilient central bank policy. But here is the question I want to leave you with. With finite oil reserves, can the dinar maintain its high score in the global economy forever? It's a compelling puzzle about the future of wealth and one I highly encourage you to keep exploring. Thanks for diving into this explainer with me today, and keep learning.